Hi, everyone, and welcome to this CPE webcast, Building Economic Resilience, How Accounting Firms Can Stay Profitable When Markets Shift. And after all, they do. Markets shift, expenses creep up, clients get slow on payments, and suddenly saying that your firm is busy doesn't always mean your firm is profitable. In this 50-minute conversation, Ohio CPA Kelley Brubaker breaks down what economic resilience really looks like inside today's successful accounting firms and how leaders can stay profitable even when markets feel uncertain. This 50-minute CPE session is brought to you by CPAPracticeAdvisor.com and 8am CPACharge. You can find them at 8am.com. 8am CPACharge makes it easy for accounting firms to accept online payments, automate reconciliation, and manage billing. I'm Isaac O'Bannon, Managing Editor of CPA Practice Advisor, and I'll be your moderator today. I've worked with technology, CPAs, and tax pros for more than 25 years. CPA Practice Advisor was founded in 1991 and provides a variety of news, expert commentary, best practices, CPE, and other educational resources. Before we get started, let me explain how you earn your CPE for today's webcast. The event will be 50 minutes and qualifies for 1 credit of CPE in the field of, actually, I've got to look that up. I believe it was general accounting. If you want to claim the CPE credit, you must stay with us for the entire webcast. During the webcast, there will be 4 polling questions. In each poll, you need to record an answer. This is our verification and a requirement that you are still engaged with the webcast. After the event, you'll be presented with a post-event survey evaluation form. Your CPE certificate will be sent to the email address you used to register. During the session, you can ask additional questions in the field on your screen, and the speakers will try to get to as many questions as possible during the presentation, but they may answer them in the following Q&A or answer them by email afterwards. Today, I'm joined by Kelley Brubaker, CPA, and Brittany Hoffman. Kelley's a CPA and the owner of Profit Scale Thrive, an Akron, Ohio-based accounting and advisory firm where she partners with law firm owners so they achieve overflowing profits, scaled growth, and thriving lives. Brittany is the webinar program specialist at 8am, where she leads the company's webinar initiatives. And now we're ready to begin. And so I say hello, welcome, Brittany and Kelley.
Great. Thank you so much. And thank you, Kelley, for joining us today. I am so happy you're here.
Thanks, Brittany. I appreciate
it. Today's conversation is about what it really takes for accounting firms to stay profitable when markets shift. Not really just in theory, but in practice. So, Kelley, you work inside a lot of accounting firms. What's the clearest sign you're seeing right now that economic pressure is starting to build?
Yeah, so for me, I know, and so I've had my accounting firm for 20 years now, and I know the biggest thing is when the firm feels busier than ever, but I, as an owner, have less take-home money or less cash that's in my reserves. And it's also the creepy little things creeping things like collections. You go to bill clients and the person, like the client who always pays you the minute you send the invoice by email, now it takes 5 days, like slower. Certain clients just start stretching payment terms. And then like for me, a bigger thing is if I start to delay decisions that I'm making within my firm, because I'm kind of uncertain about the numbers. Because numbers change every day, and growth or, shrinkage, it's never a straight line. It's always peaks and valleys, right? And if I get to a point where I'm starting to hesitate, that I'm not sure what's happening, those are all cues to me that there's just economic pressure that's starting to build in my firm.
Absolutely. And do you think it's showing up more on the revenue side, the expense side, or both?
I know for me personally, like COVID kind of hit my revenue side big time, and so it was all expense side. But I feel like I've really recovered on the revenue side, and other firm owners that I talk to are the same. I feel like there's a ton of work out there. It's just getting a good match to the right clients. So I feel now a big pressure on me is on the expense side.
Absolutely. I think a lot of people could agree with that.
Yeah.
So when you talk about economic resilience, what does that actually mean for an accounting firm beyond just cutting costs?
Yeah. So I know for me, I want to have visibility into my cash flow. It's not just about profit. I mean, I want to make sure, I mean, definitely I want to make sure that I have a profit at the end of the year or the end of the month or the quarter or whatever time frame I'm looking at. But I just want to make sure that I'm ahead of the game. I'm being proactive with decisions that I'm making. But I also want to make sure that I'm designing. So my firm, and just like a side tangent. I've had my firm 20 years. And when I started my firm, I was single and had no kids. And then I got married. Then I had kids and grew my firm. But then I'm like, whoops, okay, I'd rather be a mom. So I cut back part-time. So for a really long time, I worked, half time throughout the year. And that gave me time. I could be the PTA mom and be at school all the time. But now my kids are in high school. I have a senior and a freshman, and now I'm back into growth mode. And so the key is being able to have flexibility. And so right now it's, finding part-time people who have the ability that I can grow their hours, because, my biggest cost is staff. And, so flexibility is a big thing. So anytime I'm making decisions, I'm looking at what's the best decision I can make now that gives me flexibility in the next iteration of my business as I continue to grow. And then and this was a hard thing for me, is knowing which services and clients actually generate profit. So at one point, I was doing payroll, bookkeeping, filing sales tax returns, preparing income tax returns, tax resolution. And it was just so much and was spreading me too thin. And it took me a really long time. It was hard decisions to go through and cut out from a service perspective. And then I'm better with clients now. Clients that just aren't profitable for me, I wish them the best and I help them move on, but not every client's a good fit for me.
Absolutely. Yeah, I can understand that. In your experience, what's really the first thing that quietly breaks down when a firm is heading toward financial stress, really before leadership even realizes it?
So I struggle with this. And now I struggle with this in my firm, but I can look at clients all day long and be like, whoa, you need to warn, I can easily warn clients. But for me, the very first thing is, I have cash flow gaps. So payrolls due. And then I'm like, oh no, what do I have to do? I have to borrow against my line of credit, or I have to switch something that I'm normally paying with ACH. I now have to switch to a credit card to get that extended time before I actually really have to pay it. That's really my first clue. And it sucks. But like I said, it's harder for me to see it in my own firm. And I don't know why, because I should be more intimate with my own numbers. But clients, I can readily just say, as I'm looking through their books and say, hey, wait a minute, you're increasing your credit card spend. What's going on there? Or, you normally run payroll on Mondays for payout on Friday. Why did you not run it until Wednesday? It's because behind the scenes, they're, scurrying to put money in the right accounts, right? So that's usually the very first sign. Yeah.
Okay. Yeah, that makes sense. Isaac, why don't we go ahead and run our first poll?
Okay. First, I want to note, I did look it up. This webcast qualifies for one CPE credit hour of business management and organization. So the first polling question, please remember to answer this. How would you describe your firm's current financial position? Very strong and stable, but watching it closely. There's some early signs of pressure, or you're actively concerned about profitability. And what are you guys seeing among firms and current worries about the economy?
Wow. So right now we've got, let's see, 49.1% stable but watching closely, 36.8, very strong and stable. We've got actively concerned about profitability is at 5.8. And then some early signs of pressure are 17.8. So definitely seeing some concerns about pressure, profitability. So yeah, interesting results here.
Yeah, I mean, and those results probably don't surprise me. I mean, I feel like there's quite a few stronger firms these days, and I'm not really sure. I feel like people are finally recovering from COVID. I mean, it took a long time, but
Right.
but those that are, if you're concerned or struggling, I mean, there's definitely help out there that can help you propel you up to the next level.
Absolutely. Absolutely. Kelley, I have my next question ready to go. What changes in client behavior, whether it be slower payments, scope, more price pushback, do you tend to see early? And how should firms be reading those signals?
Yeah, I think the first one I see is clients taking longer to pay. And that hurts because I know that they're stretched. I get it. And honestly, it's probably because I've been telling them that, hey, your cash is low. So there's been warning signs I've been talking to them about. But when they are slower to pay me, that really hurts. I mean, it's personal because I'm not going to lie. I'm a business person, but everything's personal to my firm. So when the payment timelines get stretched, that's a big client change in client behavior for me. Although so my firm, we only serve law firms, and I'm seeing more of my clients are now negotiating scope. So I'm starting to see, because what they're doing is they're saying, hey, I have staffing issues. And why does my paralegal doesn't need to be doing this? Can you do it? And so I'm starting to see where they're trying to say, hey, because I do flat fee. I try not to do hourly billing. I do very, very few. I'll do special projects on hourly billing if I just can't figure out how much work is going to be involved. But I try to do other than that, I'm doing flat fees. But that flat fee is like I'm doing X, Y, and Z. And so, so I'll have clients come to me and say, hey, I mean, I just had this. I had somebody who was a CFO client. He has an in-house bookkeeper, and she announced, hey, I'm retiring. But thankfully, she is saying now I'm retiring at the end of this year. So it's a long, and she's been with the firm for a very long time. And so it's going to be a big, stretch on the firm to replace her. But I get the phone call saying, oh my gosh, I'm in a panic. She's leaving me, but I have runway. I have time to make this decision. What do I do? And, can you take on more work? And so we talk through it. And so it's a change in price because it's a change in scope, but it's one of those things where they're just trying to figure out, do we even have the right people in the right seats in the firm? So I'm like, yes, absolutely, we can take that on. But I see, and so in that situation, it's not a bad thing that that the client behavior is changing, but it's you start to have these conversations with clients, and they're so between on the downside, they're stretching, taking longer to pay me to pay my invoice, but then you have the good conversations where they're like, well, I'm not really sure that we're growing, or we have we have somebody on staff, but they're not really a bookkeeper. We made them our office manager. Is what can we do? Because as a client, the client's growing, and we have more work, or we have more demand of that person's time. So what can we do that we can shift stuff onto your plate to my accounting firm? So there's spectrum, but it's just talking to clients is really, I mean, the clients never want to confess and say, I can't pay you on time, but you'll start to see it, when the payments come in. But, just having a check-in call with clients, and is there anything I can help you with? And, because if they're growing really fast, and that's what's happening with this firm, the bookkeeper's retiring, and at the same time, they had this marketing campaign that really kicked off, and they have all these leads coming in. And so now they're short staffed and they have somebody with significant responsibilities who's retiring. So, how can I help them? So there's definitely signs, but a lot of it's conversations and reading, like hearing what they're saying, because they never come out and say, oh my God, I'm struggling. So at least they usually don't,
Right.
A brave face, but it's listening between the lines and see what they're saying.
I feel like that's a problem with all of us. We don't know when to say we're too busy. Do you see a lot of office managers kind of acting as bookkeepers as well?
Oh yeah.
Really? Okay.
Yeah. So again, my entire client base is law firms, and I would say, so my firm is set up, my accounting firm set up to where my primary service is CFO, so fractional CFO services. And I have a bookkeeping team that, because what I had happening is that I would get on a call with a client and I'm like, oh, well, I'm looking at your numbers, but some things don't make sense. And then the clients are like, well, I don't know, I'm at the mercy of the bookkeeper. And I'll dig into QuickBooks and I'll say, oh, well, wait a minute, your checking account hasn't been reconciled in 4 months. And they're like, I don't know. And so that's why I ended up supplementing and adding bookkeeping services. But yeah, I mean, it's, so I hear it more just because I hear from being a fractional CFO, I forcefully have conversations with clients and they try to put on a brave face sometimes, but once I tell them, I'm like, just be honest with me and I can help you better. So yeah.
Right. I think that's key, definitely. So a lot of firm leaders are, as we know, heads down, billing hours, and feel like things are perfectly fine until they're not. What are the 2 or 3 numbers they should be checking every single week, no matter what?
Oh, absolutely. So I would check your cash balance, and not just the month end balance, but as a graph. I'd like to see it, maybe not every day, but your balance every week over 60 to 90 days, because I want to see what the trend is. And I know in my firm, since I do a lot of fixed fee engagements, but the way I set up my contracts, they don't all bill on the 1st. So it's whatever day you sign the contract with me. So if you sign on the 13th, your payment then is due on the 13th of every month going forward. And so I know I see the trend in my firm where it's, because if I have a lot of clients that sign on the first 2 weeks and then I have less money coming in the last 2 weeks of the month. But I know that trend. So it's more about the trend.
Nice.
So look at your total cash and in the trend over the 60 to 90 days. That's the first one. The second one is, and this, I thought I was going to escape this by doing flat rate fees or fixed monthly fees, but I don't, but your effective hourly rate. So I thought, oh no, this will be great because I'll just set up a fixed rate and we'll just get the work done. It'll be great. But then I realized that I wasn't pricing, like my monthly rate was not enough in some situations. So the second thing I would have you look at is your effective hourly rate. And I would either do it if you have distinct services. So if you have, bookkeeping versus payroll versus tax or fractional CFO or whatever your service offers are, if you can kind of group it that way, because when I started breaking things apart, that's when I realized, oh, this is why I'm not making money here. Because I stopped doing payroll service. I was doing payroll, and you know what? It is a high volume and I just can't do it. I can't. So I got to a point where I'm like, I realized that my effective hourly rate on payroll is not good. So effective hourly rate's the second one. The third thing would be accounts receivable aging. So how much is over 45 days? That, because the more money you have growing in accounts receivable, I know if I talk to clients, I have so many clients who will say to me, I'll say, hey, cash is a little bit down. And they're like, nope, it's all good because my accounts receivable is 500,000. And I'm like, I'm panicking. I'm like, no, that's bad. You don't want your accounts receivable.
I can only imagine.
I mean, I want to get the bills out, but I need to get it paid. So I want money in my bank account. So accounts receivable, like what does that look like? How much is over 45 days? And get those paid. And if the clients aren't paying, cut them loose. I mean, I had already said, not every client's a good fit. It took me a long time, like lots of lessons to learn every client is not a good fit for me, but you know what? They're a good fit for somebody else. So it's not, I try to end things on good terms, but honestly, it's not worth it if you're doing all this work and you're doing amazing work and then the client just doesn't value or they just don't have the cash flow to pay you. So it's just not worth your time. Focus on where you're going to get paid and profitably get paid.
I love that. I think we all feel that way. Okay.
It's hard because I'm a mom and I just want to give everybody hugs and I want to be the cheerleader and the encourage. Yes, you can do it. The little engine that could and all that. So it's hard, but there's just times where I've had to walk away from clients. I'm like, look, I get it. This is hard. I love what you're doing, but I just can't continue to be in this cycle of constant, doing the work, pushing to get it done, and then not getting paid. I'm struggling to make payroll. I mean, it's a tough cycle. So it's
definitely
hard
not
to break
sustainable.
from. Exactly. It's just not sustainable.
I feel for that completely. Okay. So moving into profitability and operational blind spots, where do accounting firms most often fool themselves about their true profitability, especially when margins start to compress?
Yeah, I think the big one, and I see this between my friends that own accounting firms and my clients, my law firm clients, is revenue's growing and it's not profitable revenue. So, and I know for the longest time, I'm like, oh, I can't wait till I hit $1 million in revenue. But you know what? The more revenue coming in, it sometimes masks the inefficiency that's happening in the firm. So relying only on revenue growth is not good. And then another thing I see, and I don't know, I feel like there might be a shift in this one, but owner labor. So now my accounting firm's an S Corp. So I get a W-2 paycheck, but a lot of companies are LLCs or partnerships and they don't get a paycheck. And so when you're not getting a W-2 paycheck, your expense isn't hitting your payroll expense for you as the owner is not being captured on your profit and loss. And so you look at your P&L and you're like, oh, I have a healthy net income. It's 100,000. And then I'm looking at it and I'm like, well, wait a minute, but that doesn't include your pay as an owner. So is 100,000 healthy for you? I mean, if you're living in Los Angeles, it's probably not, or New York City, if you're in a high cost of living area, right? But if you're living somewhere else, that might be an amazing, and that's awesome, but not having on your P&L your wages, it gets, sometimes numbers get distorted. So, and then, like I mentioned, like flat fees, when I first adopted flat fees, I thought it was the greatest thing ever because I hate time tracking and I hate billing and I hate collecting. So flat
I remember you telling me that.
Right? I mean, somebody kind of introduced the idea to me and I'm like, oh my God, and I ran with it. I did not even pass go. I mean, it was like, I was like, well, we're running with this one. And, but my first, and this is back, probably 15 years ago when I was doing payroll, sales tax, bookkeeping, tax prep, all of it. And I'm like, ooh, $250 a month. I'm like $3,000 a year. This is a deal. And oh my God, it was a deal. I mean, it almost ran me out of business. It was so good because I thought, oh, I'm so happy I've got money coming in, but it didn't occur to me whether that was even profitable. So it took me not very long, but probably longer than it should have, probably about 6 months where I'm like, wait a minute, why I have this money coming in and I'm still not profitable? What is happening? And then I'm like, oh, because 250 is not enough at all. And so, so it took me a long time to get the guts to increase my fees. But I mean, if you are, if you're doing flat fees, that's great, but make sure that you're still reviewing pricing so that you're still profitable with what services you deliver.
Absolutely. On that note, Isaac, why don't we go ahead and run our second poll before we jump into the next question?
Okay, and here's the cue for everyone to get back to your keyboard. Pardon me. What is the first sign of financial pressure that you've noticed or worry about? Slower client payments, declining new business, rising expenses, lower realization utilization rates, or you're not sure yet. And I'm going to throw one in there just to note, if your firm happens to be running full strength, never been better, go ahead and click not sure yet, since you do have to record a vote for that question.
Wow, we're kind of all over the place on this one.
Yeah.
Yeah, we've got about, I'll send this. Yeah, we've got about 22% slower client payments, 20% declining new business, 34 rising expenses, 11% lower realization utilization, and 11% not sure yet.
Yeah. And it doesn't surprise me. The rising expenses, it's everywhere. I mean,
Yeah.
I'm seeing it in all my clients. I'm seeing it. I mean, I'm constantly getting, the email. I think I just heard yesterday QuickBooks is increasing pricing again in the summer. Like they just increased pricing. So yeah, increased pricing is definitely like the toughest thing that I have to deal with right now. I know for my firm.
Really, really. So do you get lots of questions from like current clients or prospective clients about that? Okay.
Yeah. I mean, clients will ask me, especially about the QuickBooks, and it's always, okay, what else can we move to? And I'm like, well, you're kind of limited, because the problem and this isn't going to be new to anybody listening from the CPA world, but the alternatives don't have as much flexibility or options. They're not as flexible as usability wise, I guess. And then to jump up to the next tier, you are talking multiples of what you would pay for, like, just to go to the next tier of software. So you're kind of in a bind. I feel like I'm in a bind with being stuck kind of with QuickBooks, and you just kind of have to suck it up and deal with the payments. But yeah, I mean, I have clients that are, oh my gosh, I have this subscription and it keeps increasing. It's $1, another $1 every month, or $5 every month, or, depending on what it is. And that's the creep that is really hard to deal with. But I see it as well in my firm.
Yeah, I bet a lot of people do. So what billing, collection, or workflow habits do you see that quietly drain profitability? So things that feel normal, but are actually costing firms real money.
Yeah. And these are personal for me. I mean, I can't even tell you the delayed billing after you complete your work. So I get the work done. I've gotten to a point now where I force myself, if it's a monthly recurring work, it's automatically, the bill goes, it gets paid. I use Practicognition, so it automatic payments come through, so I don't have to worry about any of that. But on my hourly, and I continually probably have 3 to 4 projects going on at any one time. So I just put on my calendar every Monday morning, bill for last week's work, because if you delay the billing, then you're really just hurting yourself, because the work's done. So you got to get the work. If the work's done, you earned the money, you need to get it billed so you can get it collected. And then of course the tail end of that is like inconsistent payment terms. So what I used to do when I was like full hourly, I'd have some clients that would come to me and say, hey, can I pay you in 10 days? Sure. And then the next person would come in and say, hey, can I pay you in 15 days? Oh, yeah. Okay. Yeah. Yep. I'm like, as long as I get paid. And then I started hitting, well, I routinely pay everything 30 days. And I'm like, oh no. So it gets worse and worse.
Yeah.
And I'm like, well, wait a minute, I have to do this work, and then you're going to take 30 days to pay me. So inconsistent enforcement of like payment terms. And then and to a lesser extent, like reworking things. So client thinks I'm doing X, Y, and Z. I think we're doing A, B, and C. And just that there's like this, it's not meshing. And so And, so the
Right.
client will push back and say, well, wait a minute, why didn't you do this? I'm like, well, because let's look at my engagement letter. Unfortunately, I work with law firms, so they know. We go, where do? We write to our contract. And so we go look and say,
Exactly.
see here. And then, but what happens is, I'll put, I do this, and they don't read it the same way as I intended it. That becomes the problem. So sometimes it's just rework, trying to get, into a stable, situation to where what we're doing is what they needed done. So there's misconception
Right.
among clients. They just think I have a person, I've got my tax guy, I've got my
Absolutely.
bookkeeper, I've got whatever it is, and they don't, that person's doing. I mean, the big thing right now in the tax world is, and I've seen this coming to a head for a long time, and I'm like, it's finally here, but so many people are like, oh my gosh, I'm so mad at my tax person. I owe 10 grand this year. Why couldn't they tell me? And I'm like, well, wait a minute. You hired them to prepare your tax return. Tax planning is a
Right.
whole different ball game that you need to pay
Yes.
additional for. It's not, and your person, by the way, can't predict the future. So you need to be working with them all year, this year for 2026, so that next year in 27 you don't have a big tax bill. And it's just two different things. And I was guilty of this. When I did tax prep, I included tax planning in that, and I would have clients come in, and when they picked up their return, this was 15 to 20 years ago, they'd come into my office, and I'm like, oh, have a seat, and then let's talk about this return. And I would ask them, I would do some tax planning, nothing major, but just, hey, is income going to go up this year, or is it going to go down? Maybe we need to change your W-4 withholdings, or maybe you need to make an estimated payment, something like that. But it's just the mismatch in what they expect you're doing, they being the client, versus what you are like, hey, this is my MO. This is like, I have this package of services. This is what I do. That's not included. So just the mismatch, it creates an issue. So for sure.
Yeah, that makes sense. And I go back to you saying, some people are like, can I pay you in 15 days or 30 days? And I feel for you, because I am a notorious yes man. So it's really hard for me to say no.
Yeah. I have a horrible time because I'm like, oh yeah. Okay. Yes, I'll do it. I'll figure it out.
Yes.
And then in the inside, I'm
Right.
screaming like, oh my God, what am I doing? So yeah,
Right.
no, I'm the
Because
same.
it
I am the same.
because ultimately it affects you. Yeah.
Yeah. Yeah. I mean, I was in a unique position when I started my firm that I had enough clients, and I had enough clients for staff. Like I could hire staff right away because I had enough work that I was able to start. But I had one big consulting job. And where I went wrong is that I relied, thinking that one consulting job, which was a good hourly rate, and it was a lot of my time. So I hired staff to deal with any of my other client stuff. But I was using that consulting job to pay all of my other bills, so I had the ability, I had tons of cash coming in. So if somebody came to me and said, hey, I haven't done bookkeeping for 6 months, I need it done. And oh, by the way, I need my tax return done, and I need it done now because I'm trying to get a mortgage. And so I've got to have it filed. And I'm like, nope, fine, I can handle it, because I had I had the cash flow to support making those decisions. And then when that consulting job went away, then things all of a sudden were just like, what was I thinking? And then it's hard to go back when, people are like, hey, but last year it was fine. You could do a whole year's worth of bookkeeping in a week, and it was no big deal. And I could pay you 6 months later. And I'm like, it's not okay. Right. It wasn't even okay then. It's not.
I know.
It never was.
I hear you. I know. I feel like you and I are both.
Hard.
Yeah. We're both empaths. We want to make everybody happy.
Yeah, exactly. And so it's hard.
It's hard. So can you share, I'm trying to figure out a way to word this. Can you share a specific client example? Like, do you have a firm in mind where you've seen this kind of thing like play out? They have operational blind spots. They're not actually good at fixing it. Do you have specific clients where you sort of seen these things play out that get kind of messy?
Absolutely. Yeah. So I have, and it's not a current client, so this is going to be a law firm. But this could happen in any business. It could happen in your business. It could happen in any of your client businesses. But I had this client, it was a law firm, and I was so excited, loved the firm owner. She was an amazing person, and she still is. I don't mean to talk about her in past. I talk about her in past tense because she's not a current client, but she's still with us. But she had other interests other than being an attorney. And so she owned this firm, and she knew she had this great practice, and she did IP law, so intellectual property. And that is an area of law where it's very common to do flat fee. So, because a lot of law firms bill hourly. And so IP is a good one where they're like, no, we'll file a trademark for you. It's going to be, $2,000. And the $2,000 gets you, we're going to fill out this initial application to USPTO. It gets filed. We'll handle the first appeal, and then we're done. If you need additional help, it'll be another fee. And I encourage her to increase the fee just because, the amount of work that it was taking to get the initial application submitted, like prepared, submitted, and the first appeal. I'm like, I don't think you're making money on this. Well, her, personally, she's torn because she's like, I really don't love law anymore, and I want to do this other stuff. And she had this other side business she was trying to grow. And so in the meantime, she says, okay, I'm going to hire an attorney that doesn't want to be a firm owner, and that person can just replace me. And so, her and I talked about it, the firm owner, and I'm like, oh, that's a good decision. Love this. Well, in the meantime, she now needs an office manager just to coordinate, to keep things, making sure client communications, everything's moving in the right direction. So we worked on pricing. We increased the pricing a little bit, and it could cover the new attorney that's coming on board. So all good. But the office manager was like, oh, I have to order a new computer through Amazon, and I think I'm going to add to it this dresser for my bedroom. And so quietly,
oh my gosh,
before you know it, oh my God, $80,000 is how much we found that the person, and it's not to say that every office manager would do this. I'm not saying that. It's just, it was opportunity. This one person had an opportunity.
Yeah.
Worth really well. But then now you have new people, you have a business owner who's a little bit disengaged from the business. And so there's no oversight. And before you know it, money, and she just kept seeing the firm owner, just kept seeing, well, Amazon. And then it started creeping in with DoorDash because the firm owner she ordered lunch in one day. She was in the office and like, oh, hey, there's a couple of us in, I'll just order lunch. And then DoorDash, all of a sudden it's like every day it's like a Starbucks order or something. And it's just those things that you keep your eye off the ball. And it's so hard because as a business owner, you're just juggling. It's just constant juggle. And your staff have a different set of plans than you, and your clients have a different set of plans from you. And so you're trying to juggle, and then people are like taking one ball out of your thing, and you're like, oh my gosh. And then you get back in the pattern, you're okay, you're juggling everything. And then somebody throws 3 extra balls in, and you're like, oh, I don't know. So, I mean, it's hard, but yeah, it's just, you take your eye off the ball, and before you know it, it gets out of control. So, I mean, and that's why we put controls in place. So making sure that people who have cards are, they have a good, low enough credit limit, that they're not going to do too much damage, and that there's reviews in place. But yeah, it's scary how things can happen that can get out of control. But then the flip side is I've had clients who are, and this is where I'm guilty, I'll do it all myself. I'll just do it all myself. And that's not a good place either, because if you don't have a team to delegate to, I mean, it's a fast path to burnout. So you can't do it all, but you have to put stuff in, controls into place so that trust is still there, it's in place, and we're all doing what we're supposed to be doing. So.
Yeah, absolutely. Okay, before we go into our next section, cash flow and planning with confidence, Isaac, do you want to throw up that third poll?
Okay, we are on question number 3, and let me refine it. All right. Does your firm currently use a cash flow forecast? Option 1, yes, regularly updated. Number 2, yes, but not consistently. No, but you're planning to. And the last option is no, you're not using one.
Yeah, I'll be interested in these results because I know what my answer is. Because I started my career at KPMG, and not necessarily from the cash prediction, like not from the cash forecast prediction, but doing a cash flow statement. Oh, Excel, there's formulas, there's all these things, and it never balanced. I could never get it to work right.
Yep.
So I know when I started my firm, I resisted anything that had anything to do with cash flow. And it took me a long time to say, okay, it doesn't need to be intricate. But done is better than perfect. So I'm curious to what 100%. These results are going to say. Yeah.
Yeah, we've got 23% slower client payments, 19% declining new business, 32% rising expenses, 10% lower realization utilization.
No, I think we're on a different poll.
Yep, we were on 2. Okay. 36% yes, regularly updated. 30% yes, but not consistently. 10% no, but planning to, and 21% no.
Yeah. So yeah, like I said, I really resisted doing any type of cash forecast because I felt like it needed to be very detailed. And I just don't have the mental capacity to deal with managing my own firm when I'm trying to work with, a whole bunch of other clients to manage their firm. But it took me, so Monday mornings are I block off about 2 hours on Monday mornings. That is my, going through, reviewing my numbers, looking ahead, looking what happened, looking ahead, make this week better. But just putting together something simple, and we're power users of Excel. So just open a spreadsheet. It does not have to be pretty. It just needs to be functional. So just getting some type of a forecast together, I would really encourage you to do, because you see it. I mean, I just did this with a client this week, actually. I have a new client, and he came to me like, oh, hair's on fire, and I have no idea where to go. I don't know where the water is to put the fire out. And I'm like, well, okay. And as I start looking at his numbers, and I'm like, well, this looks great. And so I put together this dashboard for him. We had a whole conversation, and I'm like, what are you worried about? What are you concerned about? What are the things you don't know that you don't know? Like, if you can kind of guide me into what you're not looking at. And so we had this, great conversation last week. And then, this week I sit down and I'm like, okay, I'm going to take this information. I'm going to create this dashboard for him. And the one number he gravitated right to, I put a number, I call it cash runway. So essentially, I did a 13-week, so 3 months cash forecast. Definitely nothing sophisticated. I mean, it was literally, here's what the cases you settled, accounts receivable coming in, your payroll going out, your ad spend. His big things are your payroll and ad spend are like his 2 big expenses. So I separated those. But then all other outgoing, owner distributions. And I think his number was like 22 weeks. Like, he had cash for 22 weeks. And he was like, oh my God, do I really? He was like, I feel so much better. I always feel like I never have cash. And I'm like, no, you actually have a lot of cash and you're fine. But because he's looking at, he grabs his phone and he's looking at his bank balance that's constantly changing all day because money's coming in, money's going out.
Right.
And so he just didn't have a way to look at it. But, just doing a very quick, it doesn't have to be pretty. Done is better than perfect. Just get some type of a cash forecast. And maybe you start off with just the next 4 weeks. But I think as you start building it, you'll start to see, you're like, oh, now I see that I need to do something. Something's coming up. I have a client not renewing. And so that money's going to come down. So just putting together a cash forecast, it's really, I know it's hard for us as business owners to take time to manage our own business, but just a little bit of effort goes a long way. So, yep.
Yeah. So actually, speaking about forecasting, I know you talk a lot about it, even in our private conversations. So for a firm leader who's never really done it, what does even a basic forecast actually change about how they make decisions day to day?
Yeah. So my thing is it's about not being emotional. And this took me a very, very long time to accept. Because I was extremely emotional. I am very emotional as a person. Okay. She was right on, Brittany, we're empaths, emotional.
We are.
Like I could
Totally.
cry and the next minute I'm like peeing my pants because I'm laughing so hard. So emotions
Yeah.
are all over the place. And I know for me, for the longest time, I would just be so emotional. If a client didn't pay me on time, I took that very personally. It would ruin my day, dark cloud over my head. And then a client pays and oh my God, the sun came out. I'm like, oh my gosh, I'm so ecstatic. I've got all this stuff I need to do. And then there's no plan. And so I'm just furiously, the stack of bills are on my desk and I'm furiously just paying just because the money came in. And it took me getting over that and making a plan. And really, so there's a book called Profit First, and you don't have to read the book, but it's by Mike Michalowicz, and essentially it's taking the old school envelope method and converting it into the 21st century. So you have bank accounts instead of envelopes. But the idea being that we have income and we have envelopes, and you need to take your cash, if theoretically we have cash in our hand and we're going to put, $10 needs to go into my payroll envelope and $2 needs to go into my operating expense account and $3 needs to go into my tax envelope. And just being able to take the emotion out of making financial decisions for me, for my firm, was a huge thing for me. And just so I know now, I have money comes in and I have it earmarked. And so what I like about Profit First is it's based on percentages. So if my income's up, because like I said, I have my contracts get paid in different periods throughout the month, different days. And so I may have high cash at the beginning of the month, but low cash at the end of the month, or maybe it's mid-month is high. I mean, it fluctuates over time, but I know money comes in to my bank account and I already know a plan. I already know how I'm going to spend it. I'm going to allocate so much to my paycheck. I'm going to allocate so much to my tax bill. And then I'm going to allocate so much to paying my people and paying different operating expenses. And just taking the emotion out of it, it's sad for me because I really am a very personable person. I want everything to be personal. But when it comes to money, it's just, if you can get the emotion out of it, it's so much easier to make decisions, to be able to plan ahead. When money comes in, it's easier to be disciplined about, I'm looking to bring on a CFO. Well, that's going to be high dollars for me. I mean, I have other staff, but they're bookkeepers. And so that's going to be a big hire for me to hire a CFO level person. And so I've had to start putting saving money now, and I probably won't hire this person for a year. But I need to get cash saved so that when I can bring somebody on board, I can take the time to onboard them, train them what I want done, how to work with clients, and then start transitioning client work to them so that they can start earning their pay going forward. But having the discipline to know what my long-term goals are helps me to be able to put money aside and save it for that situation. And things can change. Just because you make a plan doesn't mean that that's set in stone and that it's never going to change, but it'll give you some flexibility that, so when I'm ready to hire somebody, I have the money sitting ready to be able to make my next hire. So, but just getting the emotion out of it and doing a forecast will help with that. So, I mean, that's my,
Absolutely.
I hate the forecasting part and the fact. So, I came, Big Four, on the audit side, it was always, you were validating what already happened. And forecasts were scary, predicting the future. We never put an opinion on that. So we never wanted to project anything, right? But it does, if you can just do, start at 4 weeks, it really helps. And I encourage you to go out 3 months, 13 weeks. It gives you a lot more flexibility to make decisions. So,
yeah, absolutely. So before we run our final poll, let's kind of dive into what you think resilient firms do well. So that tension between protecting what you have now and still investing where you're going. How do resilient firms actually navigate that? I guess what I'm asking is, where do they draw the line?
Yeah, and it's hard. I mean, you have to, like, I try to work through this with clients. I'll say, tell me what your goals are. And they'll say, I want to hit X in revenue. And I'm like, okay, great. That's always the one that people always tell me. I want this much in revenue. And then you have to dig now to the next level. Okay, but what does that mean to you? And yeah, I usually get the puzzled look, like, what? And I'm like, okay, but how many staff is that? How many do you have to have can you still be remote? Do you have to have an in-person office, or do you have 2 offices? What are you working 40 hours a week? Are you working 20 hours a week? Are you working 60 hours a week? What does this look like? And then the final piece is, to really put the nail in the coffin is, okay, but what will this mean to you at home? So if you hit whatever the revenue goal, whatever your goal was, because now I start to look backwards, because I want to keep pinning them on, if they tell me, well, if I can hit this revenue number and we work through some of those details of what the staffing looks like, what the office looks like, and I can bring it home with, okay, so that means you can work 30 hours a week, or you can take 1 vacation a year, and you're taking none now. Okay. So I need to keep that in my back pocket so that I can that's the carrot that I'm dangling out through the rest of the year. Mm-hmm. But getting I need to know what your ultimate goals are. And then I can walk you through and say, okay, well, are we on track? Do you have the leads coming in? Are those leads converting to new clients? Are you growing the revenue? Do you have the right staff serving the clients to get you to your goal, to where you want to go? And I think a lot of it is, it's hard to define what you want. I know I struggle with it. I struggle saying, I want this, I want this much money in my retirement. I want this much money in my, my bank account, whatever that is. It's hard to name it, but if I can at least start where I think I want to be, and it changes over time. I mean, if you would have asked me 5 years ago, I would have had a different answer than what I would have today. Because I know different things, and life looks different now. And that's just always the case. But as long as I know what my end goal is, then I can start going backwards and saying, okay, do I even have the right staffing? Does that make sense? Because change is scary. I know it. I know change is scary, no matter how you look at it. But if you can at least, and who predicted COVID? I mean, nobody predicted COVID. I can remember I was at a meeting at school, at a PTA meeting, and the superintendent was like, hey, we're getting word from the governor that we're probably going to be out of school next week. And all the moms are like, whatever, dude, you're so far out of, you're not even talking our language. And, so nobody could predict that. And I get that. But so I'm just saying, you kind of at some point have to put little blinders on and say, I get there's going to be things on the fringe that happen, and they could be catastrophic or maybe little blips, but you cannot plan for every contingency. So if you can kind of put the blinders on, and maybe they have little holes in them, so they're not too strict, too straight, too strict, but at least kind of focus where you want to go. And then, that way, and I guess I tell clients, I said, think of me as your GPS. You want to take the kids to Disney World, you type in the address, you get in the car, and what happens? Recalculating, there's a detour, there's a car accident, there's construction. So just because you want to get there, you are going to get there, but you're going to take some detours, okay, or around the town, off the highway, whatever it is. But if you don't ever say what your goals are, and you're never going to get there. So if you just say, I want to go on vacation, what does that even look like? And before you know it, you're just out driving, and you're like, I don't know where I'm going. I just knew I wanted to go on vacation.
Such a good point. So,
yes. Yeah. So just kind of defining what you want and work towards that, and just acknowledge that things will happen. And as things happen, you just deal with it. Deal with whatever happens, and we move on. We learn from it and we go on. You're going to make bad decisions. I've made a ton of bad decisions. I'm still running strong. There's always hope. Nothing's final. And so it's just kind of just get a plan and a general idea of how you're going to get there. Just know that there's going to be hurdles and roadblocks, and you just deal with them as they come up.
Absolutely. Absolutely. Okay, Isaac, why don't we go ahead and launch our 4th poll?
Okay, for the 4th polling question for CPE credit, Which area are you most focused on improving right now in your firm? Profitability, cash flow, operational efficiency, client experience, or growth?
I'm curious about this one.
Yeah, good question.
Wow. So far we've got 66% profitability and
Yeah.
33. Okay. So we've got 31% profitability, 19% cash flow, 26% operational efficiency, 8% client experience, and 15% growth.
Yeah, those are good. I mean, and there's no
Yeah.
wrong answer. I mean, but I like that there's diversity in that answer, because it's not one thing is the answer for everybody. So no,
Right.
this is good. I like that. Those are good answers.
Yeah. I love it. Okay, Kelly, before we close out, I have a couple more questions to ask you. Practical takeaways. So, for someone listening right now who wants to do something concrete in the next, let's just say 30 days, not a big initiative, just one real step, what would you tell them to do first?
So I would offer 3 possible answers. The first one, get a 90-day cash flow forecast. Does not need to be pretty. I recommend Excel because we're just Excel gurus, but if it needs to be pen and paper, whatever it needs to be to make you do it, get it done. So that would be one option, because I just think it gives you more insight onto where your firm's going, and you'll have more runway to make decisions. The second thing that I would say, if you're like, nope, I just can't do the cash flow forecast. So the next thing I would say is tackle the top profit leaks in your firm. And so, and I say it as profit leaks because, and I talk about this often with clients, think of a leaky faucet. So if you have a leaky faucet, you turn it, or for whatever reason, it's still dripping, but it's one drip, and you're like, it's just one drop of water at a time, not a big deal. But if you plug that sink overnight, the sink would fill. Okay, so that's why profit leaks are a big deal for me, because it's those little things that you're just like, whatever, it's not a big deal. They add up over time. So, and where these usually you find them, it's forgotten subscriptions. You hit the auto pay, you signed up for something, and it's just ding, 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 hitting your credit card every month. You're not using it. So that's a profit leak. If you bill hourly, making sure you capture all of your hours in real time, so that you don't sit down at the end of the week and be like, oh, did I work 1 hour on that client, or was it 2? I don't remember.
Right.
So make sure you're capturing time in real time. Billing, get billing and collecting. Bill as fast as you can, collect as fast as you can. And I'd even, if you're doing any type of paid marketing, look at your marketing return on investment. So what is your ROI? If you have any unproven marketing, so if you're doing Facebook ads and LinkedIn ads and Google ads, well, if Facebook ads aren't hitting, quit paying for them. So either fix it, change the ad, or quit paying for it and focus on the methods that do work bringing in clients. And then the last thing I would offer, which I kind of already mentioned, but really focusing on your billing and collection processes. So get work done. If you're an hourly biller, get the work done, capture the time, bill it, get it out the door as fast as possible. There's a metric that I've recently started talking about called cash lockup. And I liked it because to me, it's very visual. And so lockup is how much is your cash locked up between billing. You've done the work, you need to bill it, and you need to collect it. So where is your cash tied up in that cycle? Yeah.
Phenomenal. Oh, Kelly, this has been so wonderful. I know we had, I think, a couple questions come in, but I think we're at time. So Isaac was going to close us out, and we will be sure to send those questions from Charles and Peyton to you so that you can answer them offline.
Absolutely.
Okay,
thanks, Brittany.
Thank you, Brittany and Kelly. Thanks, everyone, for attending this informative discussion, and thank you to 8 a.m. CPACharge for sponsoring this topic for CPE credit. Visit 8am.com for more information. For participating in today's event, you'll receive your CPE certificate in the email address you used to register. Be sure to check your spam folder too. If you have any questions about the CPE, contact us at editor@cpapracticeadvisor.com. This webcast event will end now.